What's up, guys? Hey, if skyrocketing interest rates got you stressed, well, in this video, I'm going to show you how to secure those elusive low interest rate loans even in today's market. You're going to discover techniques that could save you up to 5% on your interest rate by watching this video. All right, let's get started. All right, if you're investing in real estate, I've got two strategies you got to keep in the back of your pocket when it comes to finding low interest rate loans. I talk to investors all the time who tell me, listen, I want to get started in real estate investing, but I just can't afford 9% interest rate loan to buy investment property. Well, here's a news flash. There are loans out there that do not require you to get into a loan that is at 9 or 8%. You can actually find deals, that is properties where your loan rate can be as low as 3%. Now the question is, how do you do that? Well, I'm going to break it down because there's two specific types of deals I'm talking about here. The first one has to do with new investment property. So the issue that we're running into now as real estate investors is if you're out there, you're looking for deals and you're looking at properties, there's not a lot of people selling real estate. And so the issue that comes up many times, if you do find a deal, they're asking these ridiculous prices, which drives your cap rate down right now because the interest rates are too high to buy an investment property. However, if you consider buying new property, that is, there's a lot of builders out there who are building properties are now stuck in this position where they have this inventory and it's not moving like it used to because the interest rates have gone up. So these make great investment opportunities. Now, most times when I tell people, hey, consider new construction as an investment deal, they think I'm nuts. Why would they buy new construction? Well, there's a lot of reasons why you may consider new construction. One of them being that you have lower CapEx expense because the property's new, so things aren't going to break down. The other thing is it can drive down the cost of your insurance as well. Because insurance companies, when they're pricing that out, they know that house is new. They know it's built better because it's built to the highest code standards now for all the types of things that can go wrong. Hail, floods, hurricanes, you name it. So that's going to mean it's a lower cost of insurance for you. But the more important thing, which makes this such an attractive target, is that these builders who are trying to move inventory are now investing in or getting involved with what we call builder forward commitment loans. Now, if you haven't heard about this, I want you to research it because it's really important that you understand this. What builders are doing right now in order to move inventory is they're going to lenders, and this is an FHA program. They're going to these lenders and they're saying, listen, I want to buy the points down on the loan. So if somebody comes to buy my property, they're not going to have an 8 or 9% loan rate. They can get a loan rate at 5% or possibly even lower. You see, whenever you're selling property, the most you can give in concessions is 2% off the deal. However, when you buy the interest rate down with these loans, you're doing this before you're entering into negotiations with the buyer, so it doesn't count as a concession against the seller. So they're able to do this in order to move in inventory. Now, I've talked to a lot of investors who are using this strategy right now. So if you're looking to start investing or you're already investing, consider finding new builds and asking the builder whether or not they have a builder forward commitment loan in place and what that interest rate is going to be. You may find you will get a better deal in that environment. All right, so that's if you're going out there and you're looking for investment property new deals. Now, this next strategy has to do with existing properties, and you want to find someone who is selling the property and they have an assumable loan. Now, most you are familiar with Freddie, Fannie conventional loans. Those are non-assumable. But get this, USDA, FHA, and VA loans are all assumable. Now, in order to assume these loans, though, you're going to have to engage in a house hacking strategy, which means that you're going to have to actually move into the property and treat it as a residence. But if you're in that market, this isn't such a bad deal because here's a great house hack. You find a duplex that has an existing FHA loan on it that was taken out at, say, 3.5%. You can assume that loan. So if I'm in the market and I'm looking to house hack, what you should be doing is looking for those deals, researching the loan that's on the property, and then approaching the seller and talk to the seller about assuming their existing loan. Now, when you assume the existing loan, you will have to go through the underwriting process with FHA or USDA or VA. However, When you go through that process, as long as you can qualify for that loan, you can take it over at that current interest rate. Now, the seller, on the other hand, they will be relieved of that loan burden. So it allows you to move into these deals that ordinarily you think were not approachable, but they are now, because now you can get an even lower interest rate because you're picking up that interest rate that seller may have taken out 5 years ago when interest rates were so much lower. Those are two strategies you ought to be considering now as a real estate investor in order to get after these lower interest rate loans, new construction, existing property. If you're going to go into house hacking, the best thing about real estate, of course, is is that once you get into that deal, as long as you've bought right, you're probably going to make money. I've experienced that with my own portfolio. All the best with your investing. Hey guys, if you like this video, be sure to smash the like button. And if you're not yet a subscriber, subscribe to the channel so you'll get an update every time I release a new video on asset protection or tax issues surrounding real estate investing.